Hey, what's up YouTube? It's Flex and Joe, and I'm back today with a video to discuss drawing pivots in the price action so you can use it to your advantage while trading. So there are just a few things to consider when drawing pivots. The first is what time frame you're going to use. Right? Today we'll be on the 10-minute chart for a little bit. The second thing to consider is whether or not you're going to use the extended hours or just the regular trading hours, the New York session. And then the third thing to consider is, are you going to mark the pivots off of the bodies here on the up closed candles and then on the down closed candles at the lows? You see how those came out here. Or are you going to mark them based off of the wicks? So those are decisions that you're going to have to make for yourself based off of your personal preference, what you see, and how you view price action and trading. Myself personally, I like to use the line chart approach, which is marking the bodies, the closes of the candles up and downside. So marking the bodies, you can see how later there was just wicks that moved under it, but nothing gave you a strong close below. And what this could help you do would be helping you to define the range. And so within this range, which you get set around 11 a.m. today, and then earlier here was your high of day. So let's just say by 11 o'clock you have marked your range, or maybe you use the most recent pivot, which is right here, and most recent to you at 11 when you have marked this one, I mean. And so you could have had like, okay, well, we're in a range, now we're going to the top of the range, right? So you see this area getting support, you want to take it long, and you want it to be scaling out and profit up here, right? You see they push it higher, but then this pivot starts to give up, and you can see price action take a step down, lift the foot up a little bit, take another step down, lift the foot up, take the same step down, and now you're being held there. So if you consider that 5, 10, 15, 20 minutes, and then even here, 25 minutes of price action where you're not able to close below that same pivot, right? Versus, if you marked a wick, you haven't approached it yet. So those are things to consider when you're marking your wicks and your bodies, and that's just how I would read it and interpret it. But I read the price action, and the market structure based off of the bodies. So wicks are doing the damage, bodies are telling the story. But let's move back. Let's just clear this off, and let's move back a day, right? And we can actually mark pivots from maybe Monday, Tuesday of this week. So I'm going to put the line chart there as well, so you can see simultaneously how the areas that I'm marking on the 10-minute chart will line up. All right, so obviously here's your highest pivot of the week so far, it being Wednesday. That's where we peaked out, right? From there you saw how price did a hard pivot here, and it came under it, was trying to close below it, move lower, tried to reclaim it, couldn't, then ultimately moved a lot lower. And then here you see like kind of how the wick, this wick went through it, so closed over, and then this wick went right to it, and it just like took off, right? It was like out of a slingshot. But I would definitely, like, looking at how Tuesday's price action going into the day, I would have had probably this last pivot high here marked. I would always have right here marked because this is the previous day's close, so I always mark that level. That's the close of the 1550 candle. It's when the 4 p.m. bell rings. And I would have had probably this pivot low and then the next little stair up, right? Because it's like a set of stairs. This price action, this bullish price action, right? So bullish, lifts the leg up, puts it down, put your foot down on the stair, lift your leg up again, put down on the stair. That's just how the structure is being formed, right? And it looks pretty zigzaggy here, but this is very, very fast up, small move down on the close, gets ready and launches for the next leg. So and let's just say for one more we'll mark that right there, or even this one. This was like right before the close. This is the lowest point. So we'll see how these ones would fare on today's price action, right? So those were all just drawn, and they're really not that helpful doing it this way, right? So when you're back testing this, I just bring this up and I show you this example because when you're back testing it, you may want to, do it a different way or look at it a different way. You could always mark this high of this bullish price action here before it makes that little pullback. You do see it's a little bit closer to where, the same area where bulls step in, right in through here. You can see maybe where stuck sellers are looking to get out for break even, or buyers are, had unfilled orders still sitting there because it pushes out of there pretty strong, right? And really with drawing pivots, especially with NQ and how it moves pretty wildly and pretty rapidly, I do always say that, like, when I have a pivot drawn, I'm using it as a frame of reference. It's not an exact target. If we go down from 28 to 23, and then we wick back up and close at, maybe 32, I still consider that pivot to be valid because it's working, as you're seeing that there's respect. Even if it wicks down and takes orders on the other side, it's okay. But that's the way I view it. May also, if we're just looking back to Monday, right, where it moved down, this was the last place that bulls were able to hold it, right? Stair step down, bulls try to go to here, and then the failed bulls are getting out here, right? See, that was a key area to try to base off of, pushes, and then it failed. When it pushed back up, it based off that same area, right? That same lower pivot, which was interacted with here in pre-market. And then, I'm going to delete some of the other lines because I want to just keep everything in a frame of reference, right? That we're looking at this one pivot in the middle. Last place, bulls pushed it up. Area to base on, boom, 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 then nothing's closing below, right? And if you look at price action now, as it is developing in the after hours, right? You wanted to maybe mark pivots or areas of interest for tomorrow. You probably would be looking at this one, right? Because you can see that was such a sharp move away from there. You see how this is unfolding here. These buyers were trying to hold it, pushed up, failed to push any higher, and then finally it broke through. Now it's getting reclaimed over the 19,909, right? 19,900 is a whole number century psych level. You're trying to reclaim that, and then you'd have the next push higher need to break this little pivot, and continue to reclaim pivots while probably making a stair step fashion up, right? And the stair steps that you see, sometimes big and sometimes small, are your pullbacks when you have like trend or trending days. Good trending day real quick. So yeah, this one wasn't bad, right? Here's your open, pushes up, back. From a pivots perspective, depending on how you wanted to mark them, you can see right in through here in this area, right? And like I said, it's an area. You see, you get the sharp rejection, right? So, the market structure holding. That's the close before a little pop up. So that's where we get the rejection. And then as price action moves down, this is just a tiny little pop. You see, this looked real bullish. Like, look, maybe it was gonna this short move was gonna fail. Once they pushed it back down, the next candle pops like that. You see how this forms, and then it moves down further here, right? You see how when it pops back up, they're trying to defend here. You're just getting a little bit of overlap, but then ultimately looking at the market structure, right? As it pushes out, here's your higher high being formed, and then you get a little micro higher low, equal high. Can't move any higher. That's not good, especially where this is sort of different and getting to the weeds, not related to pivots, but even if you're marking a pivot, you see how just this little area is. I always talk about, if you get a very large move, a bullish or bearish move, it doesn't matter that it's large and it covers a lot of range. That's an area, if you were long, you really want to scale out because there's potentially more orders still sitting there that were unfilled, right? And you see that's exactly the perfect scale spot for any longs. a perfect short spot. Short, right? Because you could get in short in these wicks, risking maybe that pivot, right? So you're talking about an entry here. Let's just call it 70, risking 80. 10-point risk is pretty solid if you're looking for a good scalp. That, well, depending on any of these candles, if you get in at 70, this low here is 46, right? So easily achieve a 20-point scale for $400 a coin. All right, so I think that pretty much covers how you would draw pivots. Again, the three things to consider: are you going to mark the body or the wicks? Are you going to leave extended hours on or take them off? And what time frame are you going to use? Those are your three decisions to make when drawing pivots. But spend some time back testing it, go to different time frames, play around with it, and just see how your lines that you draw are respected. Another quick tip too is to plot tickers that you don't normally trade. Let's just say like Apple, for example, and maybe I want to go to the 30-minute time frame. So if I was like watching for pivots, obviously I want to watch this one here because this is like we have a double pivot here. This is an M, right? So up, down, up, and now potentially lower. So potentially a little M set up here, especially where, here's your high of day, high or low, equal high, then you crack the lower low. So, but again, this is a pivot of interest as well, because on Apple, I would be looking to see are buyers going to hold above where there was such a sharp turn. So can buyers hold above it? Because the buyers did hold really into here. See, mark the top of this like little consolidation area where it goes up, down, flips up. Yeah, right here. See how price came back in here, bought up right at the close. Doesn't come back to that. So this 207.68 to 207.98 would be a really key area if it's retested. But that's the tip, is to go to tickers that you don't normally trade and mark them out, and then see how your lines get respect. Label them appropriately. Like this might be maybe I draw a 30-minute line right here, but I draw a 15-minute or a 10-minute line right there. It looks different, right? Maybe I have a 10-minute line that's over here somewhere. I would mark it 10-minute, 30-minute, and then see how those lines are getting the respect, and if they are or aren't, and then adjust your plan accordingly. So use these to your advantage. Appreciate you for watching. If you have any questions, hit me up down below. And, like, subscribe, the whole 9 yards, and I'll see you in the next one, guys.